So, in doing my research today with you, I stumbled across the case that you had written or were a part of with Phantom. So, what was funny is I was just doing my own research, and when I was looking on Google, was reading this article, and it happened to be the whole case. So, I'm very excited for what we're going to talk about in this X space. And without further ado, I want to welcome you to the podcast, and I want you to introduce yourself and just talk a little bit about your background and kind of how you got into the crypto space to start.
Thanks, Vanessa. Okay, so I started in the crypto space in 2020, along with a lot of other people. A lot of people joined the space right when COVID was happening. We were understanding that the world was more global. And so that's why I think cryptocurrency initially sparked my interest, is the global nature of this new financial system that's being developed. And so I just got involved on the investing side, major coins, Bitcoin, Ethereum, like you'd expect, getting introduced. And at the same time, I was graduating law school from the University of Pennsylvania and moving to New York to start my legal practice. I was starting in white collar criminal defense, but pretty quickly moved into some sort of a crypto defense role where I would be working on behalf of big crypto companies and DeFi companies in defense of like SEC subpoenas or government scrutiny of these companies. And I think that kind of goes into how I grew up kind of in the crypto industry over the last 5 years. Is there was a period of 2020 and 2021 where things were great. I was investing in it, just kind of getting to know about cryptocurrency. And then in 2022, 2023, there was a lot of litigation corresponding with a crypto crash and crypto winter, where 7 different billion-dollar cryptocurrency companies collapsed in a 2-year span. And I was litigating some of those cases in New York and involved in post-bankruptcy proceedings. I was involved in coming up with class action litigation strategies. So I was getting very familiar with crypto litigation while just being so interested in an industry that's kind of collapsing, so to speak. I mean, it went so far and then just took such a major step back. And so I was just really interested in why that happened, who were the major players responsible, and how that unraveling was all kind of intertwined. And so that's what got me so hooked on the crypto space and wanting to learn more about it. And then I guess after that, I took a job where I was representing Celsius in post-bankruptcy litigation. I was investigating about 100 different actors that potentially aided and abetted Alex Mashinsky, who was the head of Celsius. And I really felt confident in my ability to litigate these cases and wanted to do it on my own. And so I launched my own practice at the beginning of this year. And 2025 has been a complete roller coaster and amazing learning experience for me in the crypto world, where I've actually dove in head first. I wrote a book, I launched a meme coin, I started my own crypto practice, I sued Phantom like you. I've been learning a whole lot and really been interested not only in like Trump's regulatory regime change in the crypto industry, but also all the side effects of that. A lot of scams, a lot of fraud going on in the background, not very much enforcement, a little bit unclear guidelines, and trying to do my small part in moving the industry forward. So that's a little bit about me.
A little bit about you. That is amazing. You're doing so much in the industry. And honestly, I want to say that I am so thankful for you to be on the show because truly I feel like even though our missions are insanely different because I am not into law, it's amazing because we're both trying to achieve ending fraud and illegitimacies in the market. And right before you hopped on, you were asking me, hopefully we'll be able to hear a little bit from me. So I'm going to just tell you really quickly that I got involved in this huge pyramid scheme back in college when I was trying to learn FX day trading. And they were trying to help me use AI trading software to pass passive trades for you. So honestly, as you can assume, it turned out to be a huge pyramid scheme. I lost 2 grand in the process. And believe it or not, that's what motivated me to get involved in the crypto space. And it's funny because everybody has their own unique story of getting into crypto. And a lot of those stories are somewhat negative, like just how you were talking about the crash in the crypto market is what intrigued you to actually continue to get involved. So, and same with me experiencing some sort of scam and fraud and wanting to get involved. So I think it's really cool, your story and everything that you're doing in the crypto space. And we're going to touch upon these topics. We're going to talk about your Trump preset. I also saw you had a YouTube video about that, which I want to bring awareness to because I definitely want to use that as a resource below if anybody wants to check it out. I mean, we're going to be talking on here, but it just, you know, if you want to recommend to your friends, it's a really good video to watch. And I've basically done my due diligence before we talked today because I think you have great insight and everything you're doing is great. So with that in mind, I know later we're going to get to your crypto book and it's behind you, isn't it? Right there.
Yes, it is.
Amazing, amazing. Yes, we're going to talk about that. And I know that in the book, you were talking about Celsius and FTX. And I was thinking it might be nice. And I'm sure so many people in the crypto space already know about Celsius. It was huge. But I thought that that might be nice, like as a starter to talk about and kind of give people a debrief about the company, what happened. And I'll kind of share my thoughts within it too.
Yeah, let me kind of walk you through why I think that the crypto industry collapsed back in 2022 and 2023. I think that there were some CEOs and heads of these crypto companies that were very, very convincing to the general public that they would receive outsized returns that people could only dream of if they invested in whatever cryptocurrency those CEOs were selling. There was almost like cult-like followings on some of them, especially with Terraform Labs and Luna and the UST stablecoin. I think that that really was a big catalyst for the collapse because when a stablecoin is pegged to the dollar and so many people think it is pegged to the dollar, there's just a lot of money that you think is safe and secure. And if that turns out to be nothing, then it could really collapse. The issue there was with it was an algorithmic stablecoin. And so there was an algorithm tying Luna to UST pretty much to keep UST pegged to the dollar. So this all was reliant on positive factors for Luna, a bull cycle in order to maintain that peg. And you really see when it's an algorithmic stablecoin as opposed to just a stablecoin fully backed with reserves. If there is a bank run, which means a lot of people want to redeem those tokens for real money, and they do that very quickly, then if it's not backed one-to-one with anything, then it becomes a bank run to see who can get the liquidity in the pool. And once that's drained, X number of people don't get any money and go to zero. And so I think bank runs actually can explain a lot of what happened in 22 and 2023 is when markets start to get bearish and people start to feel that their money is not as safe as they initially thought it was, redeem it from cryptocurrency to fiat. And when that happens very quick, it drains liquidity pools. And all of these calculations that these companies have about certain amount of yields they're promising their customers and certain amount of the stability and safety of that initial asset, which is pretty much the risk of whether or not that asset is going to default, go to zero. When there's a bank run, the likelihood of a default goes way up. The safety of those assets goes way down, and the whole formula of these yields makes no sense. So there was a lot of these companies that were promising such a big percentage yield on pretty much people's deposits. And so that's really what took down a lot of these companies. You know, you can see BlockFi, Celsius, Voyager, Genesis, all these companies having very large yield promises that really just become Ponzi scheme-like if they're unable to all be redeemed and followed through with. And I guess one other point is what happened with FTX is that there was a large amount of FTX tokens which were overinflated and hyperinflated, same as Celsius CEL tokens. Those were hyperinflated in value. And then when these companies start to use big percentages of tokens to act as collateral for loans and different business deals, it turns out those tokens aren't really worth what they say they are, their actual market value. And so kind of when the charade is up and the claims of what they're actually worth turn out to be lies, then everyone scrambles to say, I want to cash in my tokens for whatever I can get for them. And you see this on a small scale with small meme coins that launch. You see this on a big scale with billion-dollar currency. There's always a risk that people decide that they would rather have the dollar than the cryptocurrency. And if the cryptocurrency is not properly structured or secured via things like staking, then the whole network can collapse pretty quickly.
That's very true. And I first want to say, I remember back in like 2021, 2022, when Bitcoin was at like 20,000. And man, like what an opportunity that would have been to hop in at that time. But there was so much uncertainty in that time too. And also, we're going to talk about regulation and what Trump is trying to do. And I think in that time too, with the Biden administration, because there was, I don't know, questions around the regulation, it also led to a lot of deception in these companies. And when we talk about Celsius, I always say on the podcast, and like this isn't financial advice, but I always just think it's good to look into the business model and really truly follow the company, like get invested into the companies that you're actually investing in their native token, because it's so easy to follow the crowd in crypto, because we always talk about how crypto is like sexy. It's a sexy way to invest, which is just basically what all my guests have been saying about crypto, and I believe it. But you know, a lot of people get lost. They get lost in get rich quick schemes and they trust too easily. And I think part of that was a lack of regulation, 1000%. But also the CEOs in Celsius, they were putting their own money into Cell, correct?
So I can't get too much into it because I actually
Okay.
worked on that case, but it's
Yes.
very well known. Alex Mashinsky, the
Yeah.
CEO of Celsius, what he was doing, he actually was selling a ton of CEL tokens on the market. So he actually was just cashing in CEL tokens while he was encouraging many others to buy it. And I think this is a lesson that I actually talk about in the YouTube video you plugged earlier, is that be mindful about what the CEO is doing or the head of a token is doing.
Yes.
If the head of a token, if a developer of a token is selling that token, that shows you what they think about the value of that token at that current valuation. And also you made a very good point about regulation. That is the second part of what happened in crypto winter. There was the issues with these tokens not being what they said they were worth. There was these questions about what these CEOs were representing, about what people would get on the return on their money. But there was also a big part of this where the Biden era administration, the SEC, took a very strong stance. Gary Gensler took a strong stance against the crypto industry, along with Elizabeth Warren and other consumer protection heroes. Some of those claims were pretty far-fetched. I would say some of them are really strong. I think where they get at, the true fraud and the true misrepresentations, that's where they did a great job trying to clean it up after the fact. Where I think they didn't do such a great job is labeling every cryptocurrency as a security, which
Right.
doesn't quite makes sense to people like me. But it's complicated how to regulate these new financial assets.
Well, exactly. We're walking into like a completely new financial market, which is exciting, and I think that that's why everybody's super attracted to it. But also there is a lot of potential for more freedom in here, like as we get into blockchain and stuff like that. But you're right, and I know we're kind of jumping ahead, but when we're about to talk about Trump's regulations and resets and all that stuff, and I had been doing some research myself, and you had probably mentioned this in the YouTube video as well, which sparked my interest. But talking about meme coins and how meme coins are like completely classified now simply as like collectibles. And I think that that makes perfect sense. So, and I also want to say, I do agree that the Biden administration was very, I feel just, I don't want to say against crypto, but just very like cautious and unsure about crypto. And it's nice to see that we are moving forward in it, because even fintech and if you take out of crypto, you take yourself out of crypto, blockchain has so much opportunity. The D apps on Ethereum, for example, there's so much opportunity outside of just crypto for us to utilize and like better our financial systems and be more financially independent, be more independent even in our social media apps and how we interact with each other. So there's like so many benefits beyond crypto, and I think that's what a lot of people miss. But a lot of people get lost because there wasn't regulation. Now we're seeing some sort of regulation. So do you want to talk about Trump and just go through everything that he's done for the crypto space, and I can help you to add some stuff.
Yeah, sure. Happy to talk about Trump. So Trump, in November 2024, when he was announced to be president, I think right before that, he went to Bitcoin, a big Bitcoin conference, and he declared that we are going to make United States the crypto capital of the world. And he got a number of key endorsements and aligned with a couple big donors around that same time. Fair Shake PAC donated $150 million plus to fund not only Trump getting into the White House, but also many congressmen and senators getting elected. And so there was a big political movement in November that I said at the time is going to create a reset of regulation of the crypto industry. And it turns out I was exactly right. Pretty soon after Trump made a number of pre-presidential announcements about what he planned to do in the crypto industry. I wrote another article about this. You heard him saying, we're going to fire Gensler on day one. We're going to, all of his picks for cabinet members, all pretty pro-crypto. So he built a team around him that is very pro-crypto, moving into January 20th. And then on January 17th, earlier that week, he launched a meme coin, which went to several $billion market cap and really took the whole crypto world by storm, because this was a layer 2 Solana cryptocurrency. And we didn't even know in America necessarily what the rules were about issuing these sort of meme coin layer 2 tokens on Solana. And our president goes ahead and does it. And the first lady then goes and does it. There was obviously a lot of issues with those launches, and you saw some serious price volatility, and quite a few people lost money on those tokens, and you saw like a lot of scams surrounding those token launches in general. But it set a tone of what Trump expected to do for the crypto industry moving forward, his involvement in the crypto industry and what it would be. And you see it right away. He on the 23rd, he pretty much got rid of some Biden era old initiatives / regulations. He said that he wanted to move forward with making US the crypto capital of the world. Then pretty soon he ended up having a crypto summit where he had major leads of US companies come to the White House and talk about what US policy should be in the crypto industry. And you also see around that same time, it might have been the same day, that he announced the US would start maintaining all of their cryptocurrency that they had seized, create a Bitcoin stockpile, create an altcoin stockpile. It's a little bit unclear about how exactly they're going to move forward with that, if they're going to actively accumulate in the future. But it shows a radically different stance from a previous administration who was prosecuting the industry to a current administration who's actively at least holding on to their cryptocurrency and trying to work with the crypto industry to set up some guide rails for it, which is exactly what's necessary.
I also want to say that I really like that they are accumulating Bitcoin, for example, by everybody who has scammed us or frauded us previously, which I think is actually so brilliant because it's cleaning up bit by bit the crypto industry and everything that's gone wrong with it. And I really like that they're using it for the crypto reserve to be able to make something, I don't know, make some justice out of what has happened, because every single year we lose billions of dollars in the crypto industry due to hackers and fraud and scam and all the illegitimacies. So it's like to actually in some sort of way be collecting that money back and that damage back, I think is really beneficial and a great way to try to flip crypto back on its feet. But anyways, keep going to what you were saying.
I would love if Trump pursued that the Trump administration pursued the exact strategy you said, and more forcefully, if they were really stepping up enforcement, going after hacks, going after fraudsters, really prosecuting the bad actors and building upon that stockpile. Unfortunately, we've seen the administration take a pretty strong stance towards deregulation. They got rid of the specific cryptocurrency DOJ unit. They've just taken the SEC has pretty much issued a bunch of no action guidance, or withdrew or dismissed or settled a lot of big cases involving potential frauds. There has been generally toning back from going after those frauds, going after those scams. And that's something actually I predicted would happen. When you get a very pro crypto president who's very connected with the industry and the big players, there becomes a little bit less scrutiny of the market in favor of just more open markets and more support for the markets. And that kind of regulatory vacuum, so to speak, allows for the opportunity for more frauds, more scams to take place. I would estimate that we've seen more crypto frauds and scams in the first half of 2025 than ever before. It could be pretty remarkable in the amount, especially as we've seen a trend towards self-custody, which I do want to talk about. And I have a pretty different stance than I think a lot of people in the crypto industry about. So while Trump administration has been very bullish for the crypto industry in so many ways, they've definitely been less, I would say, less serious than the past administration in pursuing crypto crimes. And I hope they set that up.
Yeah, I completely agree. I mean, we're both on the same page for that. We hope that they would take it a little more seriously, and it, I think of it on an educational standpoint, because I think a lot of people in the market get lost in just like influencers and like retail investors and stuff like that. And I think that if we do not push true education and also true resources and stand our ground with crime, we're never going to truly excel in the crypto space like we could. And that's what I like. So I do live interviews in Boston. This is another thing about myself. But I go up to people and I ask people, are you in favor of crypto? Do you support crypto? Because it's really fascinating how many people just don't even care to learn about it, because there's such stigma around it because of all the scams and the fraud that's happened. So while Trump and the Trump administration is doing all these things to regulate it, we're also trying to clean up its image. And in time, that takes a lot of effort. But I think that we're moving in the right direction. You're so right. They need to be more specific about the crimes that happen in crypto and actually seek to solve them probably more effectively in both of our opinion. So I agree with you there. And I know that just like a week ago, the Genius Act had come out about stable coins. I don't know if you had a comment that you wanted to share about that.
Yeah, I think that was the most common sense bipartisan thing that Congress could do. And that was something I actually predicted all the way back in my article about the regulatory reset. That's something that would be done this year. And it's solving for the problem of algorithmic stablecoins, exactly like we talked about earlier. It's saying that stablecoins are amazing because you can use crypto rails without the volatility of crypto. And so what's amazing about crypto is you can send any amount of money across the world in seconds for little limited fees, especially if you're transacting on a blockchain like Solana with limited gas fees. And so what happened with the Genius Act, it was a bipartisan compromise in terms of just saying that each of these stablecoins needs to be backed. It's creating a lot of good things for the US dollar globally. I think that this is part of, it's very Trump to say that we want to make the dollar stronger. And I actually think stable coins are a way to make the dollar stronger. And one way that is just buying treasury bills and getting that financial asset backed by something. And I think companies like Circle are just really revolutionizing how it's done in the United States, competing with Tether, which has been around for a long time, has a lot of problems, is not controlled in the United States. We have a little bit less, there's a bit of a murkier situation with Tether than USDC. So it's nice to see as the industry is evolving, that there's a stable coin that people can trust. Hopefully it's back to 100%, isn't going anywhere, is only going to grow. And so I think that's what Genius is meant to do. And I hope that more great stablecoin projects launch. I know Trump launched a stablecoin project, and there's many others.
Yes. And one thing that I think is important to mention too is that this will hopefully attempt to encourage bank involvement to some degree. And the reason why I'm such an advocate of like the banks getting involved to some extent is because one, I worked at the bank outside of college, so I really did see that crypto is the future just through watching our traditional financial methods and systems and institutions. But also what in the crypto space, when I started this podcast and I was looking for banks to support me, there was nobody. Like, you can't go down the Chase Bank and ask them to support your crypto company. It's like, and how crazy is that and I think that's part of the Biden administration too, is that you banks were mandated to not get involved in crypto, rightfully so, because there wasn't much regulation yet. But I just think it's fascinating, like how many people I've talked to who have started a crypto business and have been, set back by the bank because they do not support the project.
Yeah, there was a big narrative, especially going into 2025, that the crypto industry was being debanked. And I think that that was just because crypto had a lot of negative stigma after crypto winter, after Sam Bankman-Fried, after FTT, after collateral for billions of dollars, et cetera, et cetera. There's a lot of negative stigma around, and they probably just didn't want to be liable for anything. They just wanted to stay away from potential lawsuits. So cryptocurrency, for every problem it has, it's a new massive innovation that we've never seen before, that's revolutionizing the financial system as we know it. And it's allowing our ability to take back control from the current monetary system that's really favoring the old people who have been around a long time and have seen all of their assets appreciate throughout their whole lives. And as they've inflated away our dollar in the United States, and we can pay for less and less, and we're starting to see hyperinflation through the Biden administration, and honestly through the Trump administration. And two, cryptocurrency is a way where we can kind of take back control of our monetary supply, kind of flip the script a little bit. And I think that banks serve a really important purpose in this all. I'd like to see a lot of new crypto banks focusing on really safeguarding substantial assets. There already are definitely sort of custody providers of cryptocurrency. I hope that increases. What I don't want to happen is the traditional banks adopt cryptocurrency, bring with them all of the burden of the legacy financial system, and make it just cost more and more, because that takes away a lot of gains from people trying to invest in it just through administrative fees and whatnot. And it can also slow down transactions too. While yes, it makes it the more safe and secure probably to be custodied by a bank, it would make it harder to use that cryptocurrency, which being someone, it's kind of interesting, someone thinking about cryptocurrency as a investment product. I'm going to buy a coin, hold on to it, and see what happens. First, being in the crypto ecosystem and using tokens to build stuff with those tokens. That's what I started to learn at the beginning of 2025, how to use Solana to build products, how to use Solana to build applications, how to use Solana to incentivize people online, and to build communities out of layer 2 token applications on top of Solana. I think that, so it's really interesting. There's like two different kinds of crypto. It's like the really nitty gritty in the DeFi world. I'm building with this token, and there's another one where you're just trying to invest it and have it go up in value and hope that the tokens are worth more in the future.
Well, you're so correct. And that's what I try to tell people, though, is that a lot of people get lost in the aspect of buying, selling, trading crypto, but there's so much more. There's all the blockchain technology and like all the people in the industry that you could meet that are involved in like smart contract programming, but originally they were into coding and they were learning Python. And it's like there are people that are coming out of the woodworks in their previous jobs to pursue crypto, and it's so much more than just trading meme coins. trying to get 100x or just dumping all your money and hoping to get rich. Like there's actually a lot of opportunity here for people who do like to build apps and stuff like that. One other thing I think it was really cool to mention is that we had a guest speaker on a couple weeks ago, and a lot of people think that it's too late to get involved in crypto. It's too late to get involved in Bitcoin. And he was mentioning that we're overturning our financial system and our financial institutions. This is going to take years to do. And even just, it's already taken many years to even get banks to consider this idea of crypto. So like, if you're listening or you're involved in crypto, you're debating it, like this, the beginning is now. Even though it's already established, there's so much time to get involved. And hey, and listen, when I got involved in FX day trading, that was not my thing. But potentially getting involved in like blockchain analysis, which we're meeting with somebody who does analysis for blockchain and stuff like that next week. But there's other avenues for you to excel here. And like fintech is a whole nother concept too that we could talk about. But anyways, I think everything you said about Trump is correct. And obviously for us crypto people, we're very excited that this administration supports us. And I think that there's a huge chance for more people to awaken to this opportunity, but only if we continue to keep talking about it and to keep pushing the crypto space. So I'm going to have us switch gears. I really, really want to hear about Phantom because I'm just amazed by that because you are somebody that is very intelligent in the crypto space. And honestly, it's good to tell people because even the most brilliant people in the crypto industry are like falling to scams and fraud and stuff like this. So feel free to take the floor, share your story. I think it's worth noting.
Yeah, so in the beginning of this year, I launched a meme coin, and it was initially just supposed to be for fun. I was investing a lot in Solana, and that saw really big returns at the end of 2025. And I was looking for a way to diversify my Solana into something else. And so I thought, why not actually just try to launch my own token with a bit of my Solana? And so I launched WEINERDOGE on Solana completely fair in a way that really anyone can do. What I did was I created a liquidity pool on Radium. I created a token, was able to create a liquidity pool where I inserted about $3,500 worth of Solana to set just the floor of the token price, which when it launched, it was a really low market cap. But slowly over time, I just started spreading the news on X, spreading the news on my social media. And a lot of people just loved the idea and wanted to get involved, saw the big vision of it. Dogecoin has $30 billion market cap or something like that. And there's many other cryptocurrencies that are complete scam rug pulls that are going to millions and millions and millions of dollars every single day and collapsing. And so I was in that space. I was trying to trade meme coins for a little bit. I recommend no one trade meme coins. No one trade in general cryptocurrency. No one trade cryptocurrency at all. Don't trade cryptocurrency. Unless you are an AI machine, do not trade cryptocurrency. Buy cryptocurrency you believe in, hold it long term. Buy something where you love the community and love the vibe and love being a part of something and want to see it grow. I mean, those are the two options I would say if you're wanting to get involved with buying and making money off cryptocurrency. So I think that people who launch coins do see a lot of returns, but only if they sell. And so I actually never sold a single token, launched it completely fair, continuously bought the token. And over time, I just continued to invest, and other people did too on their own volition. And it skyrocketed in value. It went all the way to a $3.1 million market cap on January 10th. And it maintained over $1 million market cap until it was unfortunately hacked. I kept a large portion of the tokens in several Phantom wallets. And I was targeted because I was constantly sharing updates with my community about my Phantom wallet and how it was doing. And so I had my private key stolen, I believe through malware that was downloaded on my laptop. They were able to steal my private key very easily from the Phantom application, and which I believe that the private key was stored in working memory. And so it was very easy to be stolen through info stealer malware. And then without having to bypass any multi-factor authentication, they were able to upload that private key and start their own phantom wallet and have full access to all of the funds in my crypto wallet. And then they liquidated all of those tokens in under 5 minutes through a rapid set of transactions that caused the price to completely plummet. It was like the worst day of my life, really. It was something that I had like spent so much time, invested a lot of money in, it was really like such a joyous time to be like growing and building something so fun. I had like a really lively community at the time, and it all crashed in a matter of seconds due to Michael Raduchowski, who I ended up being able to find. He was the one who actually hacked a number of phantom wallets. And one thing I've learned is that hundreds of different phantom wallet users have had their private keys stolen and their wallets drained. It can be through a variety of different ways, and I've spoken to a lot of different victims. And so what I did was I ended up bringing litigation against Phantom and OKX, $2 billion crypto companies, for a wide variety of violations involving the CEA, the Commodity Exchange Act, which is like the pivotal piece of legislation that's going to, I think, be in charge of regulating the cryptocurrency industry, because cryptocurrencies are commodities. I sued them for gross negligence, negligence per se, for their security failures, not having strong encryption of the private key, not having two-factor authentication, not having geolocation support, because this person was a complete different country and a complete different device and was able to completely take over my account. And also for their misrepresentations about these non-custodial hot wallets having best-in-class security and being safer than centralized exchanges, which are just misrepresentations. They do not have best-in-class security. Actually, I want to just let everyone know that having a browser level wallet is actually not a good place to keep a substantial sum of money. It is a fine place to keep some amount of cryptocurrency, but not a large amount of cryptocurrency. And I think that these apps are misrepresenting the level of safety and security of their products in a way that's misleading retail investors, especially when they're encouraging really novice retail investors to join their applications. And so I sued them on those grounds. OKX was the liquidity provider that executed the unauthorized trades. And I sued them in the Southern District of New York, where I'm barred and licensed to practice. And I was also able to trace all of the transactions on the blockchain, which I think is one of the coolest things about cryptocurrency, is that it's a digital ledger and it allows you to really have almost complete transparency. The big but is that KYC is hit or miss on centralized exchanges. But as soon as we get the KYC problem right, the money laundering concern problem right, it solves a lot of issues. But pretty much what happened, I was able to trace Raduchowski's wallets, the stolen funds, to stake.com and MEXC, issue subpoenas to both of those companies, and they turned over identifying information. Both of them independently identified Raduchowski as the criminal. And then I amended the complaint to bring claims just against Phantom and Raduchowski, because I had resolved issues with OKX separately. And so this litigation is still very much ongoing. It's very active against Phantom and against Raduchowski. I'm hoping to get a strong recovery, not only for me, but I'm also representing 13 of my closest friends and family who I had gifted tokens to, or had bought tokens very early when it was just a meme about my wiener dog. And so I really hope to get them back to the place where we were on January 20th before this happened. And this whole experience just opened my mind in so many different ways and really exposed the biggest problem in the cryptocurrency industry right now, is that there are so many criminals running wild. There's so many fraudsters running wild. There's so many schemes. It's hard to trust people. Everyone is anonymous and decentralized in a way where you can really just do whatever you want and get away with it. There's not a level of accountability. And when it's kind of like that Wild West, it almost incentivizes people to just see how much they can grab as quick as possible before those guardrails start to get put into place. and these companies have to start enacting the same sort of security measures that other financial institutions have to do, like Robinhood, or other centralized exchanges. The president and the White House just released a report that spent 20 pages talking about the problems of illicit financing and how there needs to be wallet level safety measures, because there is just so many people in the exact same situation that I faced, where their private key was stolen very easily, and that's all it took to just completely take over someone's account.
Absolutely, and I'm so sorry that that happened to you. It's just sad. Like everybody in this space at one point or another, or a good chunk of us have all experienced some sort of fraud. But then, we are created and born into this industry to try to better it. So that was one of my questions to you, was if this was still ongoing, because when I asked you to be a guest on the podcast, it was like one of the first most recent posts that you just had made. So when did this occur for you? Like, when did this all go down? It was very recent, was it not?
January 20th is when the hack happened.
Okay.
And I filed litigation, I believe in April. I believe in April, and I've been litigating in the Southern District of New York against Phantom very aggressively. It's still ongoing. There's a big motion coming out very soon, a motion to dismiss and to compel the case to go to arbitration. I have a really strong counter argument that I'm going to be drafting and releasing and filing next Friday. And if it gets past the motion to dismiss phase, then we move on to discovery phase of the litigation, where I can get unlimited access to their documents and really expose the bigger problem, which is the fact that they're having hundreds and hundreds of people notify them that their platform is not safe or secure and that they're losing tons of money. And Phantom is saying, we have no responsibility for anything that happens to anyone's funds on our platform. But they're telling the market, we're the fun, friendly, safe wallet, and we have best in class security. And you should sign up your grandma and grandpa to download the app and invest in crypto. Meanwhile, there's even the criminal, Ryduchowski, is using a Phantom wallet. So like
I
the
know.
are using their wallets to facilitate the crime, and they say that's not their fault. It's just a level of recklessness that's really wild, and I think they're just trying to hope that no regulation applies to cryptocurrency wallets, which is just not how the law reads at all, when they're literally responsible for facilitating crypto trades, responsible for facilitating crypto transactions. It's like the same thing with PayPal. There's certain government requirements for PayPal to maintain its business. They got sued by the government for, facilitating criminal activity. These companies cannot just be vehicles for crime.
And it also makes you think about the intentions of the people behind these companies. And it's sad to say, but often like the biggest companies in the crypto industry are the ones with the worst intentions. And then it's like, so who do you really trust? And then it's all that backlash with people who don't want to get involved in crypto because of everything that's happened. But I mean, to make you feel better, you are probably their worst nightmare, because you are fully equipped. Like you're in this industry, and also like you can fight for yourself, but also it's really nice that you're taking care of this for your friends and family as well, because like some people, when they get hacked to this scale, they don't recover. Like they don't go to court, they don't file a case, they literally lose their money in the crypto space. So I think it's so impressive that you're attempting to fight for your own justice, and then even what you do for your career, which I definitely want to talk about the law firm and stuff, and I want to put you out there for that and make sure that we cover that topic. But things need to change nonetheless with regulation. If we've covered anything tonight, it's that things need to change. More people need to open their eyes and get involved into it and understand that this is potentially one of the best things that could happen to us in the financial markets and industry. But I understand people's hesitation, and we do need to take it more seriously in regards to just the punishment of these crimes, and also being able to track these people. I did research into the hackers, like crypto mining hackers, and like this was probably a statistic from a long time ago, but a lot of the hackers too are like outside of the United States. Like I read one statistic where like a lot of them were coming from North Korea, like for mining hackers and stuff. So it's like we're not facing just an inside the home issue, we're facing an international issue in the crypto space, and that is really hard to accomplish and like solve. I mean, in the United States, we're slowly moving towards it, but we're dealing with criminals outside of our country too. So I think that that was just really good to cover because one, it's very insightful. Two, gives people more awareness about the scams and the scheme and fraud that happen in the market that we're trying to beat out and talk about just by raising awareness. And also just like best practices in crypto. And oh wait, you said that you wanted to talk about self-custody. Did you want to make a comment on that or
Yeah, I definitely want to. So I just want to
okay.
let everyone in the crypto world know self-custody is not safer than centralized exchanges. If you can have your cryptocurrency on one, you should put it on a centralized exchange. There are a lot of bogus centralized exchanges. So you want to really be careful to not put it on a centralized exchange that's going to default like FTX or like a lot of the the debunked exchanges of the past. But by putting your funds on Coinbase, even just buying Bitcoin, Ethereum, or Solana on Robinhood, stuff like that, you're never going to have an issue of getting hacked, getting any funds stolen, because that doesn't happen in exchange. There was, obviously a big example of a centralized exchange earlier this year that was hacked, but I believe that those customers' funds were returned. They weren't. It was taken from the business, not from those individuals, and that's exactly the difference from self-custody. Self-custody, these wallets have an incentive to increase the speed of all of these transactions, the speed of everything, so they can earn money and fees. And so because they're incentivized by the speed, they are de-incentivized by creating safeguards or protections from unauthorized transactions. And so unless you're very sophisticated, I would say most of your cryptocurrency should be on an exchange where you're not able to, potentially lose it. It'll be safeguarded by someone else who's more sophisticated than you. If you're very sophisticated, or if you're using that cryptocurrency for a project or something, that's when I think you need to do self-custody wallets. I also will say that I have found out that mobile self-custody wallets are a lot safer than browser level self-custody wallets. I think the whole idea of browser level self-custody wallets has caused so many issues, so many private key thefts, so many wallet drains. I would love there to be very, very strong guidance at some point, pretty much creating rules that those companies have to follow in terms of security practices. And honestly, there are already regimes of cybersecurity requirements that these companies should be following as money transmission businesses, but they don't think the rules apply to them. And so these wallets they think it's just everyone else's fault and they take no accountability. And so that's why you can't trust your funds in those kind of tools.
You're right. The people that are behind these wallets and stuff you can't truly trust in some occasions. What's interesting is I'm happy to hear your perspective, and it's nice to have conflicting perspectives on the podcast because it really gives people a real sense of I don't know, each situation, because we had a fund manager on who handles like very high-end top-notch clients who was suggesting self-custody. So, but you were saying it highly does depend on your level of sophistication and where you're at in the market. So like I agree with everything that you said. I believe that in time, hopefully with more accountability will come more progress, especially like overall in the crypto space. But there's so many things. Like the exchanges is one thing with hackers, and then the crypto wallets is another thing with hackers. And I appreciate your advice though and your input on that. And I think that's very beneficial for just the average trader to hear, because like the fund manager, like he's working with very, and it was a very insightful conversation and I loved everything he said too, but like those are rich people investing into crypto. So I like the advice that you gave because it helps like the average crypto investor know what their options are and what works best for them.
Exactly.
So before we close out, I want you to talk about your law firm and everything that you're doing there, and anything that you think would be nice for people to hear about it.
Yeah, of course. So my day job is I'm a litigator in New York, and I've been doing this for about 5 years. I work on a ton of big cases in the cryptocurrency industry, but also just complex commercial litigations in general involving a lot of companies. So I started my own firm at the beginning of this year, Murphy's Law, the crypto law firm, and my idea was to be a crypto fraud fighting lawyer. And I worked on behalf of a lot of victims. I got to know a lot of victims. I did quite a bit of work for them, and also working on my own self. I also defended a developer, did a wide variety of different crypto related litigations and representations. And I had such a fun time doing it, but I found a law firm that really is what I wanted to be someday already right now. And Gosai Law has been around for 3 years, and it's a leading cryptocurrency law firm in Australia. And Krish Kasai has, over 100 crypto clients, and he's just a deal master, corporate crypto master, and he's been building this big practice, and really just recently has expanded his team to about 20 different lawyers and business professionals. And we're trying to create a global crypto law firm with capabilities in the United States for litigation, crypto litigation, and corporate commercial work, and also crypto fund work, and all the business related deals that I'm not an expert at, but others are.
Right.
Yeah, and then we have a practice in China, we have practice in Australia and in the UK, and so we're really trying to create a global capability and a full service law firm that can handle global problems, because crypto is inherently global. And my practice specifically focuses on financial fraud and fraud in general. So anything involving cryptocurrency and fraud, I would consider myself expert at. And I'm also constantly staying attuned to the regulatory actions that are going on, and especially any guidance from the CFTC, the Commodity Future Trading Commission. I'm constantly focused on interpreting the CEA, the Commodity Exchange Act. The clarity piece of legislation is going to make it so the CFTC and the CEA really govern the cryptocurrency industry in the United States. So my practice really focuses on not only fighting that fraud and being in these big litigations in New York, but also trying to understand what the rules of the road are in a very ever-changing regulatory posture towards an evolving industry. So it's never a dull moment, and there's always something interesting. And the reason why I decided to stop, being at a general big law commercial litigation firm where I was doing, all kinds of litigations, to just focusing mostly on crypto litigation, is because it's a several $trillion financial regime that's just maturing, and just becoming a teenager almost. It's starting to have some idea of what it's doing, especially in the United States. I think there's some countries that maybe are a little advanced compared to us.
Right.
And I'm just excited to be here with you in this moment and be a part of this crypto industry, and being able to tell these stories in 10 or 20 years and see what cryptocurrency looks like then. And maybe it's, 100 trillion. I mean, I don't know. Maybe it's like a $1 billion industry then. And maybe people just realize that there's too many problems with fiat, too many problems with government currency, or that they just want something else to invest their money in rather than just these big US businesses, which all have such high valuations. If you're looking at like whether or not to invest in $1 trillion company, or Bitcoin, I think that that's a viable conversation, because Bitcoin and these cryptocurrencies are becoming new global currencies. And that's exciting um as just a historical difference from forever, where we've just been focusing on individual state currencies. Well,
Right. And just like tangible cash. Like, if you look at our overall future, and like there's really no backing behind this, just my own personal thoughts, but like we we all focused on cash. We all focused on tangible cash. And then we moved to debit and credit cards where we were somewhat focused on like digital cash. But now we're really trying to move to a new scale of like actually achieving digital cash. Like I never carry cash anymore. I don't know many people who do. But if you look at just the evolution of our society, we're always trending and moving towards technology. So it like for crypto to come out and blockchain and fintech and all these innovations, it's like it's only a matter of time before we adopt that. But we have to face all the bad in that, which is the fraud, the scams, the lack of regulation, and just the education. And I want to say, like, just to say, cryptic humility is cryptic humility because we are not about, I mean, we do try to push the best of the best education, but I'm no expert. I bring on credible people to talk, and it's all about starting a conversation for those people that feel insecure about learning this because maybe they feel like it's too late, or maybe they feel like it's just too far-fetched for them to understand. So cryptic humility is a space for people to learn simply, and you've done great explaining every single topic and having people follow along easily. But it's not about knowing everything in the space and following people who act like they know everything. It's about really truly trusting the in-person people, the people that are willing to show up to talk to you and give you guidance. That was another really good recommendation by somebody else, is follow the people in the space that are willing to meet with you online, face to face, that are willing to meet with you at conferences. Like, don't fall into the get rich quick schemes with influencers. And I think that's such a popular thing right now. And people might hate me for saying it, but it's true. And I think that's why we a lot of people don't learn because they feel intimidated, and also why we can't excel is because there's so much misinformation. So I don't know if you have anything left to say.
Yeah, 100%. I think you just have to look at everyone's motivations. And if someone's showing up to a crypto conference because they love it, or, creating a crypto podcast, or, they're like me and write articles about cryptocurrency regulation, or a book about cryptocurrency to try to give people a historical narrative, you have to think about those people as having a different kind of credibility than someone who's just the head of a crypto coin or a crypto company and has an incentive, a strong incentive to tell you what the truth is. I have a meme coin still right now. I think that you should get involved in my community at some point, and others listening into WEINERDOGE vibe, and just don't invest in anything at first. Just see what it's like. See what the Telegram group is like. Get excited about it or not. And if you are excited, maybe pick up like $5 worth and see how that feels. And I think that's what more people should be doing with cryptocurrency, rather than saying, I'm going to put in 10 or 20K that is a lot of my just cash sitting on the sidelines, and just hoping to get rich off Ethereum pumping to 6,000 or 7,000 at the end of the year. And instead, just pick up a little Ethereum, and then if you like the way that feels and it does well, or just pick up a little bit more. But know that these cryptocurrencies are very volatile. It's hard to time the market. You're probably not going to get rich, super rich off it in the short run. So really just think about, anytime you invest, and I'm not a financial expert or an investing expert, but if you're wanting to invest in the cryptocurrency industry, think about only doing so in projects that are going to be here for 5 or 10 years. And maybe
Yes.
think about that being your time horizon on the investment. And, Bitcoin and Ethereum, they're not going to be gone in 5 years. Solana is not going to be gone in 5 years or 10 years. My cryptocurrency, I said I was never going to sell it for 20 years for the whole life of my dog. And it's similar to that. It's just things that are going to be around for a long time, because no one can predict the short run. And we could always have another crypto winner if a couple of these companies, that have a lot of power and have a lot of the money a lot of these funds tied up, have to dump them because of a bank run, and they're all connected. So just have fun with the crypto industry, learn it a lot. Don't imagine that you're going to get rich in the short run. It's more about just believing in it. And I got involved because like people on LinkedIn that I respected, which loved talking about crypto regulation. And
Yes. Yes.
find crypto people you like listening to or talking to, and try to get involved with the project if you want to move beyond just buying Bitcoin and staying attuned to the high level crypto news.
I love everything that you said. And I think it's very true too, to close us out, that there are other cryptocurrencies that can excel besides Bitcoin and Ethereum, but it's important to pay attention to the ones that are getting US attention and that are out here already, you know, because and we can go into meme coins too and everything that you said, but I want to say that you write articles. Are you writing those articles on LinkedIn, or where can people find your resources? I will tag them in the podcast description. But I personally am curious to be following up with you and all the just the legal studies that you're writing about in crypto. I want to know I want to know where you're writing them so I can keep reading them, but and also so we can leave them as a resource for people on the show.
Yes, absolutely. You can find me on LinkedIn, on X. I have a YouTube channel that I was working on previously, and I'll be putting more stuff out. But I say my LinkedIn is probably the best place to catch me. I'll be talking about US regulation a lot in the second half of 2025. Now that we have it, I want to see what it actually is what's going to happen from that, and evaluate how this first 6 months really is going to make a difference in the next 3.5+ years. And I think we're just in for a lot of big changes. So just stay tuned. Stay tuned to me. Stay tuned to Vanessa. We're going to be sharing as much information, and I'm going to be sharing updates on my case also as that goes on. And
Perfect. Yeah. We're wishing you well on your case. Please keep us updated. You're like, we're all gonna be worried for you tonight, like going to sleep. But seriously, it was a lot of money to risk too. So I definitely will be sending good vibes your way. All your resources, your book, your LinkedIn, everything that you're comfortable sharing will be at the end of the podcast description. If you're looking for either of us, you can contact us on LinkedIn and Twitter or X. I want to say thank you, Liam, again for being on the show. And for everybody that's listening, we will see you guys next Monday on Cryptic Humility. Thank you.
thank you, Vanessa.